Hey everyone, welcome in to another daily editorial here on the KE Report. Chad and I are chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, before we get into the precious metals and the charts there, let's talk about the US dollar, because the US dollar still right in that 90 point, let's say 50 level. It has bounced from a recent low of 89.51, and then you go back to the very beginning of this year, a low of 89.17. So technically a little bit of a higher low, maybe even a double bottom. You can make the argument here. What do you think, Jordan? Is the US dollar in for a little bit of a rally?
I think so, Corey. I mean, if you look at both a short-term and a long-term chart, like if you look at a 15 or 20-year chart, you can see that 88, 89 level is 15-year support. So it's been an important peak or a bottom several different times over the last 15 years or so. And if you just zero in, like if you look at a weekly chart, for example, and you look at the last couple months, you can see, especially in the last 4 or 5 weeks, if you look at the candles, several times the dollar was able to close off the lows of the week. And then prior to this week, the previous 2 weeks, I think you had two up moves or it made two white candles. So the fact that the shorter term price action looks a lot more constructive, then you back out and see that this is a 15-year support level essentially. But then also you look at how other markets are acting, which we can get into. It looks to me like the path of least resistance for the dollar in the short term is going to be higher. Now, ultimately, I don't know if this is going to last 6 months or 2 months or 3 months or whatever, but ultimately, I think at some point, probably next year, the dollar could break down below that 88 to 89, and then we could get huge moves all around in hard assets, but we're not close to that yet. We have to rally first, I think.
Well, Jordan, if the dollar does keep rallying a bit and that 89 support holds and it moves back up where it was more like at the beginning of the year into the 92, 93, 94 level, do you think that will continue to pressure the commodity complex? Because I've noticed as the dollar started to creep back higher, we're now seeing weakness in the commodities. How do you think that will play into it?
Yeah, it should. And when you get a dollar rally, and assuming we have interest rates going lower at the same time, now that's actually an environment where gold should outperform the other commodities and should outperform silver. I mean, we saw copper getting hit hard yesterday, falling below its 50-day moving average for the first time in months. So yes, I think even though we have not seen that much selling in like silver, for example, I would just be wary that, if we get some kind of a rebound in the dollar, it starts to take hold, we should see selling in commodities. It's interesting because we've already seen a little bit of selling in gold, but not in silver. So that to me is a little bit of an outlier so far. I think ultimately, gold should outperform silver if, I'm correct about the dollar rallying and commodities selling off. But we'll see. But yeah, overall, it definitely looks like we could go into a period here where, if you're a big inflation bull, then the inflation trend is at least, it hit a temporary peak in recent months. And so we could see a counter trend move for, for at least the summer, maybe into the fall.
Okay. So, Jordan, that means a bit more of a, let's say, digestion move then. Hey, if we look at something like gold in the recent pullback from that 1920 level that it peaked at, and now it has bounced almost perfectly off that 200-day moving average, which really has started to flatline at about that 1844 level. What are your thoughts? Does gold go lower from here? Is this the boring consolidation in a narrow range? What happens?
Well, I don't have a crystal ball, but just looking at all the factors, my guess would be boring consolidation. One thing about flat moving averages, you really have to be careful with those. I mean, when you have a flat moving average and the market is, not trading substantially above or below that moving average, that can just be a mess. So I don't, gold, yeah, it's bounced above the 200-day, but that to me is not really meaningful here. Just flat moving averages tend to be a real mess. So if you see lots of charts with that, that tells you there could be boring consolidation for a while. So I see, another thing for gold I should mention, we have the quarterly close coming up. And 1900 I mentioned is weekly and monthly resistance. Well, it's actually quarterly resistance as well. So, I mean, if I'm wrong, then we could see gold make a strong close this month above 1900. But I think it's more likely it won't do that. So that's just another level to keep in mind, that if gold can't close above 1900 this quarter, that would argue that potentially it could be a little weaker next quarter.
Okay, Jordan. Well, let's shift over to silver, because I agree with you. It's been a strange environment where earlier in the year, when gold was getting pressured, really starting last August and then pressuring all the way down through the March double bottom, silver kind of held its own. It was in a range. It was just sticking in that 24 to 28 range. It really didn't crash. It really didn't gain. But you made some good points about how commodities will be affected, and silver's got that industrial component. And you also made the point that gold has now pulled back more than silver. So what's going on with silver? How do you see it?
I wish I knew for sure. It's really interesting to me. I mean, I've been wrong about silver for most of this year, other than the fact that I have not been expecting it to break out. I thought that it could test 21 or 22. I think it got down to the high 23s or maybe 24. I think that's the lowest it's gone. But I just don't see. I mean, it's a really good question, but I don't know if it's the Reddit crowd and those people who are keeping it higher than it should be. But I don't have a good answer for that right now. I tend to think that if we get a dollar rally that takes hold, and market participants realize, okay, well, the narrative of higher inflation is paused, or it's over for the time being. I think if that sets in, I have a really difficult time seeing silver continue to outperform gold. I don't know. Maybe if that sets in, gold gets a little bit more of a bid from where it is now. I mean, it doesn't break out, but maybe it rallies a little bit, and then we see silver and the other commodities sell off a little bit more. I mean, that's a possibility. But overall, I don't have that great of an answer for why it has held up pretty well to this point.
Okay. So, Jordan, then what are some of the key markets or other areas to look at here to maybe signify that the precious metals aren't going to be boring through summer or even to the rest of the year?
That's a tough one, honestly.
So no certain sectors, no certain markets that you think could be a key driver here or change general investor sentiment?
Well, I think it's going to be tough. I think we're just in a situation right now where the market needs, the gold market specifically, and maybe silver, well, gold specifically. Gold needs a lot more time before it can break out. I think we're going to get into the cup and handle, but looking at the volatility indicators for gold, looking at the price action, I just see it needing a lot more time. So I know that's a boring answer, but it's the correct answer, where I don't think, news is going to come out and really drive the market that much higher. I mean, if you look at news, inflation has probably peaked. So we're probably going to see, lower inflation readings over the months ahead. And just looking at that and factoring in the technicals of gold and silver, well, gold especially, I just don't see a real risk that it's going to break out to the upside. Now, it is possible, something happens, you get some news, and gold can rally a little bit, it can rally up to resistance, and then it pulls back after that and continues to consolidate. That's also a possibility. But that's not how, in my opinion, that's not really how markets work. When they're stuck in a situation like they are now, where it's clear that the gold is going to need a lot more time before it can break out, there's just no news that can really, change that, other than, maybe it moves up a little bit based on some news, or it moves down based on some bearish news. But I just don't, I just think that it needs more time. And unfortunately, that's just the outlook.
Well, Jordan, let's circle back around to what you said about the cup and handle, because we've heard a lot about that from different technicians. I see a lot of chatter about it on different forums, on Twitter. There's a lot of people debating, and for those that are following along, that large 10-year pattern where from the peak in 2011 at around 1921, 1923, we have that huge move down through the bear market to 2015, and then this big move up into last year's all-time high of 2089. So people are looking at that peak from 2011 to 2021 to 2020 as a big 10-year cup and handle pattern. where the handle would be the move down from August to March. And a lot of people are saying the handle is done. We've broken out of that downtrend line, gold has, and hey, it's off to the races. What are your thoughts on that larger term pattern?
My thoughts are that the handle is not done, that's a extremely premature call. I mean, cup and handles, there's no real rule, but I learned somewhere that the handle tends to be like 1/3 or 1/4 of the time of the cup pattern. So if we took 1/4 of 9 years or so, I mean, that's more than 2 years, which would tell us that gold's not going to break out until, let's say, the end of 2022. So that's just one example. Now, I have seen, I have seen patterns where the handle takes a lot more time and maybe the handle takes a little bit less time. But when you're in you have a 9-year-long cup, that's not something that's going to break out in, only 8 months or 1 year. Now, I think one example, if you go back to gold in the 1970s, it did make a cup pattern. I think in 78 or so, it broke out from that cup pattern, but the market was so strong, there was really no handle. It just made the cup. It broke out. It had a really quick, immediate pullback, and then it went vertical. So that's one situation where, there wasn't really the market was so strong, it didn't really have a handle, and then the market just exploded, and that was it for gold for decades. So that's one contrary example to what I'm talking about. But looking at gold, I looked at gold had some questionable cup and handle patterns. I think there were a couple in the early 2000s, if you look carefully, and they weren't perfect cup and handle patterns. And, those were, I think the time it took for those to break out was closer, a little bit less than the quarter, than the 1/4, as far as the time and the length of the cup. And so I was looking at those and kind of projecting, okay, when could gold break out? And it kind of all came back to like the 2-year period. So potentially, based on some history, gold could break out of the pattern, next summer, maybe a month or two before or a month or two after. And, stepping back, if you look at just two more things, if you look at historical corrections, I looked at 6 historical corrections in gold and how that could apply to today. And those point to gold consolidating for another 4 months or so from, 4 months from July or so. So it'd be, or 4 months from 4 months from July. So that would, gold could potentially consolidate, for the bulk of the rest of the year. It would be like a bullish consolidation. And then it would start to move, higher in a way that would lead to a breakout sooner rather than later. So that's one thing that I'm looking at. Another thing that's important is you have to look at volatility indicators. And there's the gold VIX is one you could look at. You could look at average true range on stock charts. You could look at Bollinger Band widths. So I look at all of those. And when those things have come down to a low and they're kind of flattening, that's when the market is set up, to make a huge move higher. And we're just looking at all those indicators. The good thing is they're all coming down. So volatility is declining, has been declining. But looking at those, it looks to me like they need another 4, 5, 6, 7, or 8 months, before they can get down to that point where the market is really ripe for that huge launch to begin. So when I look at all these factors together and I look at the current price action and the inter-market situation, I conclude that this is going to need more time. I just don't, there's no way to me that this market is going to break out in the next couple months and that, gold has broken out of this handle. I mean, to me, the handle needs more time. So the handle is still ongoing. But look, this is, the important thing here is, whether it breaks out in 6 months, 12 months, or 18 months, this is a super bullish setup where gold is going to launch much, much higher. But I think a lot of people are just going to have to be a little more patient.
Okay, Jordan, thanks for the update there. And I think a good summary of that whole cup and handle formation that a lot of the bulls are pointing to. Rightfully so. It's an interesting pattern and a long-term pattern, but It sounds like we all just need to kind of take our time and wait for a bit of a consolidation phase here. We'll see, though, because quite frankly, honestly, precious metals have been more volatile than a lot of other sectors out there. So we'll see if that volatility continues. Jordan, thanks for your time as always, buddy. We'll chat again next week.